All right, well, let me say hello and give the official cheers and welcome to each and every one of you to another episode of Happy Hour with the Lincoln, the first Happy Hour with the Lincoln for the year of 2020. It is a new year and it's a new beginnings. Now, you know what I'm here to do. I'm here to answer your stock market related questions. I'm here to tell tales and rant about stock market topics. And I'm here to share my 2 decades of trading experience with you. All in the attempts to help you guys make a little bit more money. That's it. And I hope you do enjoy it. So again, cheers and welcome to the first happy hour of the Lincoln of 2020. Big cheers to you guys. Hope this is a great year for you. Now, there's something I want to talk about before we get into today's topic. And that is, speaking of 2020, I'm going to be doing a webinar next Thursday. It's on the 9th, January 9th, 7 p.m. Eastern. I want you to mark it on your calendars. This is going to be one of the best webinars I've done. It's called The State of the Market in 2020. Now, what we're going to talk about in this one is whether or not this market can continue at this meteoric, listen, is meteoric the right word to use? This meteoric rise? Are we going to continue to see these double-digit returns out of the market? Are some of these stocks that went up 100 or 200% for the year, are they still worth buying? What are the next hot sectors? Like, where should you be putting your money? What's going to be that next Apple, that next Shopify, the next TTD, the next Roku? What's going to be that stock this year? What sectors are going to shine this year that didn't last year? And what is, most importantly, that little stock out there that we see every year, that little $20, that $30 stock that's just going to explode $200, $300 per share? What is that going to be? We're going to talk about where we think that might be, how we're going to position ourselves for this year, and most importantly, I'm going to give a brief talk about the human element in this webinar, how the algos and everything is taking control of the market, and how you should adjust your trading. Now, just from that, you got to say, guys, that's one hell of a webinar, huh? I mean, that's dishing out some serious juice in one webinar. So make sure you attend. I'm only doing it one time. So here's what I want to talk about in this happy hour. This one might actually end up being a rant, because what I want to do, number one, is clarify some things. And I want to share some education with you guys. That's what I've always done with happy hours, is to share some education, share my experiences, share my thoughts and feelings, be transparent with you, tell you what I think and what I feel. And some of the stuff that I said last week in last week's happy hour seems to be misconstrued. Now, what I talked about, if you didn't watch it, which I suggest that you do, is I was basically being transparent about my performance last year and how I was disappointed. Now, some people took that as I was just being bitter and I was being pissed off about the bull market. And that's not true. What I was saying, and I know most of you know this, it was watched the whole damn thing, is I said I made really, really good money. Let's just make that clear. I mean, well into the six figures. And let's just be honest. There's not very many day traders out there that can do that and do that consistently. It wasn't so much the money. It's that each and every one of us place expectations and the bar for ourselves. And I felt, knowing what I know, trading with the way I am, with my experience, that there was more in the tank. That's all I was upset about, is I just know I could have done a lot better. It wasn't a wash. I didn't lose money. I wasn't pissed off. I wasn't bitter. It wasn't anything like. I was just upset with the performance of myself. And I wanted to relay that to people because it's okay for you to feel that way. It's like Peyton Manning, you know, when he throws 50 touchdown passes, he's pissed because he doesn't throw 50. If he throws 40, he's pissed, right? Because he knows he can throw 50. He knows he can throw 60, right? These people who are in high power positions, high performance athletes, they put expectations on themselves. And when you want to be great, you know, you want to be the greatest that you can be, that's the kind of life you got to live. And like I said in that happy hour, trading is a performance-based business, and we are in it. Let's not sugarcoat it. We're all here for performance, and we need to pay our bills. We need to eat, but then we know in our hearts what we are capable of. And I struggled that even the years before I wasn't successful. I knew I had it in me to be successful, and I was just as pissed then, because I'm like, I know I can be more successful. I know I can do this. I know I can do it. And then once I became very successful, I'm like, I know I could be more successful. It's not that I need the money. It's just I know what I'm capable of, and I want to live up to my expectations. I don't want to be a freaking slacker. That's all there is to it. That's what I meant by it. So I wanted to clear that up. I know most of you guys already knew that. Now, where this topic goes into part 2 of this is that so many people think that when you're talking about how disappointed you are in something, or that you mock this certain bullishness or whatever, that you prepare for short selling in a market, or you're thinking about short selling in a market like this, or you're talking about potential crises and crashes and what to look out for, that you are somehow against humanity and against mankind. Now, I made a tweet about this, and some people were really critical of that. You know, they're like, oh, you're just bitter. Like I said, they're just bitter. It's like, no, I'm not bitter. I'm just explaining what I went through this year, what normally happens in stock market, because I've been around for 2 decades. It doesn't mean it's going to happen tomorrow or next week, next month, next year. But I've seen a lot of things throughout my time, which I'm going to talk about where this is really going here. And I'm kind of circling around the wagon here a little bit with the hibiki. But it was like, I started going through social media a little bit, just kind of reading some comments, which I don't do very often. And one thing that always strikes me here is how complacent traders and investors become. It's like traders can be really intelligent, but then the large majority of traders and investors are kind of dumb. They're dumb with the things that they say, and they're dumb with the moves that they make. Now, I'm not saying that's everybody. There's a lot of really intelligent people. I'm not specifically calling out any group of people or saying that some of people, but it's sort of, if you guys ever watch Mission Impossible, not Mission Impossible, what was the movie? You gotta excuse me, old man here. Men in Black, the first Men in Black, Tommy Lee Jones and Will Smith. They're sitting on there, and he says, people are smart or something like that. He said, no, a person is smart, but people are stupid. So consider that. A trader, an investor is smart, but investors can be stupid. Now, where I'm going with this whole entire topic is this. I'm not saying that we're going to go through a market correction here, but I am saying that it is totally ignorant and it's totally irresponsible to rest on your morals as a trader and get complacent in an environment. You can be more aggressive. That's what my complaint was. I wasn't aggressive enough, but you still need to be cognizant of your surroundings and what type of an environment that you are in. You always have to be that way. And what I came to this conclusion is, when did caution with your money, caution with thinking ahead, caution with having a plan B become so uncool, become so critical, become so out of favor, like you're just some sort of idiot or fearmonger, or you just, like I said, you're against humanity or mankind because you're thinking about the what ifs. It's just kind of like the fire drills, right? When you were in high school, it's like your high school probably didn't burn down, but you practiced the fire drill just in case that bad situation didn't turn out worse, that if there was a fire, the fire alarm goes off, everybody knows what to do. You should always have a plan B, regardless of how complacent you may feel. Now, this is bad, and I'll tell you why this is bad, and it's bad for a lot of us older traders. And I say older, I mean not in age necessarily, but those have been around for a very long time. And I'm not saying what happened in the past is definitely what's going to happen in the future. But when I look back on my career, I told the story before, I blew up 2 accounts. And I blew both of those accounts up off of one major core behavior. It wasn't taking too much risk. It wasn't being nutty. It was stupidity. And the core of that stupidity came from my complacence. So in 2001, when I lost my very first account, I lost that because of what happened in the tech bust. Now, it's not the tech bust's fault. I've learned that. I blamed that for years, but it's not the tech bust's fault. It's Doug's fault. He's the one who made the trades. He's the one who didn't educate himself. I tell this story all the time. It's not the tech, it had nothing to do with it. In fact, I could have made a ton of money shorting stuff in the tech bust. Now, I was told about shorting before this ever happened. There were pundits on TV constantly talking about these valuations are inflated. This is not sustainable. This is not normal. And for a long time, these people were being criticized. Now, one of the things you always get is when people are constantly bearish like that, or they're talking, they think that you're missing out on the rally. That doesn't mean you're missing out on the rally. That doesn't mean you're not buying stocks and you're not participating. Like some people say, you've been wrong for 10 years when people are bearish. It's like, no, you're buying stuff too. You're just aware that at any given moment, this is the stock market and certain things can happen. So when they started to happen, I was not prepared. That's all there was to it. I could try to shape it up any way I want to. Just going to shoot straight from me to you. I was just unprepared. That's all. I wasn't ready for it. And I didn't expect it to be that bad. The second time around, it was kind of like the same thing happened. I just didn't have enough of a plan B. Like, what happens if things start turning on you? Then what do you do? Now, it wasn't as bad the second time. I just didn't have as much money, so it didn't take very long. But I really want to focus on '01 because that's the way it all kind of went down for me. It was just one of those situations. I'm not saying this market's going to go through a tech bubble, but markets do correct. And things do happen. And one thing that we've learned, it's almost like the majority of people have forgotten what happened last December, right? Not this last December, December of 18. How quickly. And this is always kind of the way it works. And one thing I've noticed about trading, and I once was in the financial services business for a long time, and I know what most market participants are. To a trader and an active trader, this doesn't matter. They mostly know this. And if you're trading actively, you're not in positions long enough. You might get spanked on the first rollover in the market, but you'll catch on quickly and you won't lose a lot of money. Where it really comes in is all of the Ma and Pa, let's say Jane and Joe investors out there. They're the ones that are going to get caught holding the bag, just like the ones that get caught holding the Bitcoin, right? In the short term. Because all of this money that they look at right now is kind of like just paper money. So like, for example, let's say your portfolio is like $1 million. There's people investing and they got like $1 million in there right now because the market's going up and up. Well, a lot of these people aren't taking that money. You're not living off of that money. If you're in your 40s or 50s like I am, then it's like, well, I'm not going to use that till I'm 60. So it's just in there. It's in there right now. That means if the market corrects 30, 20, 30%, that money's still in there. So that money right there, technically, even though it's your money, it's real money. If you don't take it out, it's not. It's just money on paper. So if the market loses half of its value, your portfolio does. There you go. You're back to half a mil, which is still good. But anyway, the point is that's what most of the market participants are in there. There's institutions. You got those market participants that are just stashing money in the market and other fund managers and places trading it. And then you got us, which is a small group of active investors. We look like we're a big group on Twitter, but we're really a small piece of the market. And when these things happen, those people tend to panic the most because they're not educated in the market. And that's why things are very aggressive at certain times. Why this is important is because one thing that I have learned about all of this is that it does not take long. If some of you can remember, it was just December. Less than 30 days of a span. If you go back and look at the market, I think it was from December 10th to Christmas Eve. Just in that period of time, the market wiped out its entire losses. Now, yes, it bounced back, had a tremendous 2019, but at some point that may change. Now, I'm not the one to say when it changes, will it changes. I'm not a perma bull. I'm not a perma bear. I am a trader. I look at the very best opportunities. I look at the least path of resistance, and I try to position myself for that daily. What I'm saying when I look at complacency, where that hurts you as a trader, if you don't plan for, if you're somebody that's just a perma bull and you don't think about shorting or you don't understand what a short seller's thinking, you're gonna have problems because at some point that has a time and a place. There's a time and a place for everything. There's a time and a place to be bullish. There's time and a place to be bearish. There's a time and a place to look at things like gold. There's a time and a place to look for other types of asset allocation, foreign markets and stuff like that. So what I'm really trying to get at all of this is at the beginning, I know I talked about the expectations and understanding where you stand as a trader, and that's fine. But in the scheme of these things, where you really make money as a trader is protecting yourself, is to be 2 to 3 steps ahead of everyone else. As Warren Buffett said before, right? You need to be greedy when people are fearful and fearful when people are greedy. Here's a person that's made money their whole entire life ever since the day the stock market's been open practically. These are real words, right? And I'm not saying perma bull, perma bear. It's not an argument about that. It's an argument about never, ever, one of the worst sins you can make as an active investor or as a trader especially is complacency. The moment you think you got your hands on this market, the moment you think you got this thing figured out, you will get humbled. You will get your ass kicked. It does it to everybody. And that's all I'm saying is, ride it while you ride it, but understand at some point, you're going to have to switch, and that's all right. We're all going to have to do that, and then it'll come back again. It's all part of the cycle. But make sure you remember that, guys. Always have that plan B. Complacency, it's a killer. It's a killer, man. It's a killer. You don't need that, because I don't want you to get your accounts blown up. That's why I'm here. Anyway, guys, I appreciate you watching this Happy Hours. Tips, comments, suggestions, quarrels, or curmudgeons, you know to send them to me, support@thelincolnlist.com. Until next time, cheers, my friends.